Good evening, everyone. I want to take a look at SPY, particularly on the weekly and daily chart to see where I think the market could be headed next week. So let's start here with the weekly. Couple reasons I think we could be setting up for a reversal. We have a rising wedge chart pattern, which is a bearish chart pattern, bearish divergence found on the TTM, MACD, and RSI indicators. We are currently overbought, another bearish or short signal that you can find using the RSI indicator. And then we also have a shooting star candlestick pattern, also bearish. So all of this is agreeing with one another that we could be setting up for a reversal. So let's look at the chart. You can see here by plotting your higher high with the upper trend line and higher lows with the lower trend line here, we have a rising wedge chart pattern forming. Typically, these break out to the downside. So we're getting really tight here. Could see that finally break out. And a good signal that that's coming is, I think, this shooting star candlestick pattern. Give you an example here you can find on Google. All right. How does it form? We have a large upper shadow or upper wick that is twice the size of the real body, and then again a small body. These are found after uptrends and signal reversals to the downside, and little or no lower shadow or lower wick. So then we look back at the last week's candlestick pattern. Large upper wick, twice the size of the body, little to no lower wick, and it was formed after this uptrend. So we'll be looking for the downtrend to come. Excuse me. All right, and then lastly, looking at the indicators, lower highs, lower highs, lower highs, while the chart plotted higher highs. So that is your bearish divergence across those three. And then on the RSI, we get that second signal of being overbought. We're above the 70 range, this yellow line here. So we are again overbought. All right, that's the weekly chart. Let's take a look at the daily chart now. Very similar setup here. We also have a rising wedge chart pattern. But as you can see here, it appears that we have already closed below the lower trend line. This is also a doji candlestick pattern, signaling indecision in the market. We just made new all-time highs. We've been overextended. We've been running continually for a long time now, and we are overbought on the daily chart as well. Then bearish MACD cross is starting. The MACD is starting to curl, giving us that bearish MACD cross setup. And we have divergence, not from all three, but at least from the TTM alone here. So you can see buying momentum re-entered on this push as we took new all-time highs, but it is lower than the previous buying momentum. So there's your bearish divergence. So I plotted a few levels we could potentially come down and test. The first one is this gap that was formed. See if we can fill that down to 537. And then the second one, you can see we had resistance that turned into support around 531 to 535. Resistance turned support, support turned resistance. Those are always key levels to watch. So keep an eye on SPY. If we do finally reverse, look to capitalize that and short the market for some profits. And if we somehow continue to bounce and push new all-time highs, be careful, but maybe make some profits going long on it. So I'll be giving you more updates throughout the week. Hope all this was helpful, and stay tuned for more informative content.